the last 2 weeks, I would say, a lot of stocks are 10, 15, 20% off their highs, right? Tech is getting a bit battered around. Tell me, what are your thoughts here?
I think it's the 10-year, right? I mean, as the 10-year moves toward that 5% threshold, right, it's the risk off. You're seeing that in tech stocks. I mean, I was at CES last week, sitting there front row with Jensen, and I think the view is that an unreal presentation, but maybe a lack of focus on some of the near-term things that some of the momentum traders were hoping for. You saw NVIDIA sell off, you see quantum sell off in terms of some of those words. Look, we've sat here for the last 12, 18 months, always talking about in these situations, you use it as opportunities to own your winners.
Right.
The 10-year going to 5% doesn't change our view of what tech stocks do this year. I think tech stocks are going to be up 20, 25% this year. And this is just one of those moments that you'll have as opportunities in the risk off.
Right.
And I think right now the bears are sort of dominating the narrative, the bond vigilantes in that risk off. But there's nothing fundamentally that's changed. I mean, to some extent, coming back from CES and a lot of our checks, we actually feel more incrementally bullish when it comes to autonomous robotics.
So tell me, what did you see there? How exciting was it?
I think a lot of times when you go to CES, it's like, let's say it was like drones.
CES is a conference of all the new innovations for the year and looking forward in guidance.
In Las Vegas.
Right,
really
right. So it's flashy.
It's flashy, but a lot of times, like, those are things that can never go mass market. A talking refrigerator, drones.
The Jetsons were in town.
Now, autonomous.
Right.
Robotics.
Right.
We're talking about real use cases.
Right.
That
in the near future.
In the near future. Right. So my whole point is like Tesla Robotaxi Day, as we talked about in October, CES, this time even if you watch Jensen's speech and what he talks about, the revolution, we're actually going into the next stage. So my view in terms of tech, it's not just Mag 7, it's the second, third derivatives that it's going to spread to.
And those names are which? Microsoft, Google. Explain that to me.
But it's really about, when you look at use cases, names like Salesforce.com.
Right. So that means that the products that NVIDIA are making, right, the AI that they're disseminating in data centers and all that, are utilized by Salesforce? So for the layperson, explain what that means.
Think about it like NVIDIA is like the foundation of a house.
Okay.
Software, almost the rooms, the decorations, the refrigerators, the kitchens.
Infrastructure of the house.
So as the infrastructure is getting built, that's really software.
Okay.
NVIDIA is the brains, the golden oil behind it.
Okay.
But it's software that's really the use case.
Okay.
So in 2025, I think software is really going to be a huge beneficiary. A lot of those install bases are Oracle, Adobe, Microsoft.
They're going to be using NVIDIA's software, or NVIDIA's going to be using theirs.
They'll be using NVIDIA's chips, but enterprises will be deploying the use cases for a lot of these software.
So it's going to be, this is stage 2. This is the next inning that you were describing.
It's
You've been
stage
talking
2,
about.
stage 3.
Gotcha.
Autonomous, that's stage 2, stage 3. All that's playing out right now is that the stage is getting set.
Right.
And that's very bullish for where I think tech stocks go, especially in an environment where you're going to have a lot more M&A, deregulatory environment under Trump.
Which we talked about.
But we've always talked about, you're going to have headline risks.
Right.
China tariffs, even some of these things Biden's doing with NVIDIA chips in the last few days. But
he's just vying. He's just posturing.
But as we've talked about, those are the opportunities to own these names.
Okay, so we are now, amazingly enough, 1 month into this year of 2025. We're only about 9 days post inauguration. So within the new world of Trump, already we're seeing a lot of things happen, right? Obviously, yesterday the market was rallying beautifully. We've had a bit of a roller coaster within the first few weeks. But yesterday, in the middle of the afternoon, 3 o'clock, Mr. Trump out of nowhere said, I'm engaging a 25% tariff on Mexico and Canada, and the market fell off a cliff. I want to focus on one thing and one thing only today. This Monday, when we came into work, Deepseek, which is a small Chinese app, which has skyrocketed to the top of the App Store, came out with a announcement, I would guess, at most, that they can do what NVIDIA and US tech companies are doing within the AI space for basically 10 cents on the dollar. The number that got thrown out was like $6 million. They can do, you know what, it's so over my head. I got to bring Dan in, and I want Dan to really break this down for you and make it accessible and understandable.
Yeah.
Talk to me. Talk Deepseek, talk the story.
So first off, when we think about AI, the models, when we say models, ChatGPT,
Right.
Meta in terms of Llama,
Okay.
That's essentially what DeepSeek is. Think about that like it's the tip of the sphere. It's a model consumers could all download and they play around with like we
So
saw in the App
DeepSeek
Store.
itself is an app. You download it and you can then ask it questions. You can build things. It's AI.
It's a model.
Okay.
Now I think what the street got wrong here is 6 million. It is exponentially more than it costs in terms of, I believe, ultimately, potentially even NVIDIA hardware that they use and others. So the fact that they did it so cheap,
Right.
I also think
What did they do? Did they build the app for 6 million? They can offer all this
now
software for
supposedly,
6 million?
supposedly they built the app, but again, realistically,
Right.
okay, if you're actually doing it on next-gen NVIDIA hardware,
Right.
it is exponentially much more than 6 million.
Right, so the capex spent by NVIDIA doing the same thing is in the tens of millions, hundreds of millions?
I mean, if you look, 6 million would be the equivalent of 150 million that
In
it
the
actually
NVIDIA world.
that it really costs them to build.
Right.
And that's why, look, this is a Chinese app.
Right.
So you always have to take all the details, I think, with a grain or a pound of
100%,
salt.
yes.
So I think the reason the market got it wrong is the market right away said, oh, hold on a second. If DeepSeek, if Peter, if Dan, if
Right.
Jane could do this so cheap,
Right.
what does that mean for CapEx?
Correct.
What does it mean for hardware? My whole point is that models like DeepSeek,
Right.
they're going to get cheaper and cheaper.
Right.
That's innovation.
As everyone chases to zero.
Exactly.
Right.
But the point is, that's not where the spending is ultimately on enterprise infrastructure.
Right.
As they build this out, the ultimate, the 2 trillion of AI CapEx next 3 years,
Right.
that's not changing because of DeepSeek. To
Right.
some extent, I could argue that DeepSeek actually maybe even accelerates that in terms of where it goes.
Okay, so they're claiming that they can do, so people need to look at it in perspective. It's like if I came in and I had been buying a product from somebody for the longest time for $10, and somebody came in and without giving a lot of detail of the story, claimed they could do it for $2. Right, and so the world didn't really look at the nooks and crannies of the story and the nuance of it. They just saw that and they go, "Oh my God, you've been overspending." Then so either we've been being sold a bill of goods, you're overpaying, or there's something wrong with this story. But in fact, you're saying that what NVIDIA does is not comparable to what DeepSeek does. DeepSeek is a very streamlined version of, I mean, how do they relate to each other?
DeepSeek is an app.
It's an app.
In other words, the whole infrastructure is going to be NVIDIA. That's ultimately what they're actually building out. So in other words, DeepSeek is just one piece
Right.
of a much broader ecosystem. That's NVIDIA, that's the hyperscalers in terms
Right.
of what's being out. And look, it just speaks to our point. The Palantirs, the broader AI
Right.
names, that's not dramatically changing because of DeepSeek. To some extent, it actually makes ultimately more bullish in terms of what this can mean for AI.
Okay, so let's think. So from a short-term perspective, this seems like it's a little bit negative for NVIDIA, at least perception-wise, that somebody is getting things done for a lot cheaper than they are, and that they're a huge company. These guys are an app. So, right, I mean, that's the difference.
That's the difference. And also, you have to think about AI as a broader theme. They're not dramatically changing.
Right, so what these guys can offer is a very simplistic version of what they do.
And I would sort of end with, my view is, this just speaks to the innovation that's going to continue to happen.
Right.
It's more bullish than the AI theme. It's
Right.
not negative. That's why we're defending names. And I think it just speaks to more and more where this is going. It's still first inning of a much broader
Right.
spending environment.
Right. So the long term is that net, perhaps this will have a positive effect on the overall, because maybe they do have some innovative things.
That's the net, that it's more bullish for the long term in terms of where it could ultimately go.
Do you think there's anything within? Did they steal some of NVIDIA's
And again,
thunder? Did they steal some NVIDIA's IP? Is there anything of that going on? Are they not? Are their claims unfounded?
Look, and
is
again,
it any of those things?
And again, it could be some of that, but the reality is it's all more innovation for the AI revolution.
Right.
That's a key part of our thesis.
So net, I think the market is already adjusting to Mr. Trump's mannerisms around the laying out the groundwork for the tariff story. Right? It'll come out with a big blast. He'll pull back. He'll delay it for a little bit. He'll go into negotiation mode. But net, it's all about making a deal. So I think the market is already responding, because now when a tweet comes out, the market doesn't go down 1,000 points. It's sort of, maybe it does react in a fast and furious way, but it gets its footing fairly quickly. Do you agree with me that this is a negotiation?
The one
thing
thing that I would add, I think you have to make a differentiation, and the market is doing this a little bit already, and it will be noted by key people in the administration on it, that there is a big difference between punitive tariffs and reciprocal tariffs.
Yes.
Reciprocal tariffs means basically that if Europe is imposing a 25% tariff on cars that we send over there,
Right.
which may also include their VAT tax, which the administration
VAT,
is
right.
looking at
Right.
as a tariff, although it's technically not, that we're saying, well, we're going to put 25% tariffs
Right.
on any European products,
That we bring in.
European cars that come in to this country. That's a reciprocal tariff. That is just to, as they would say, level the playing field
Right.
and make trade fair. So in a perfect world, what would happen then, if we had a 25% tariff on an industry sector,
Right.
from a country that had a 25% tariff
On us,
also
right.
on our product going there, eventually we would sit across from each other at the table and say, you know what, we're charging you 25%, you're charging us 25%. It's kind of ridiculous. Why don't we just both scrap it?
Right.
Okay?
Right.
But believe me, President Trump would never get the Europeans to take their tariff off our exports,
Right.
unless he first put tariffs on their exports and let them stew about it
Right.
for
Well, look,
3 months
that's
or
his-
so,
that's
and
his bit.
see how, what that does to their economic reality.
I love that. It's a really wonderful explanation, because I don't think people understand who's benefiting and who's suffering from this tariff game. Think about it too. You brought this up to me, that our relationship with Canada and with Mexico, we import, what do we import? 6% of things from Canada, and they import 85% from us.
Yeah.
Right. So
Right.
if you think about that, then it's all
It's
uneven. It's
Right,
uneven.
Right.
So how does that pan
and
out?
where some people would describe Trump as bullying these countries, he would say they've been bullying us for decades, and
By not paying their share.
and our leaders have just been taking it.
Right.
So,
Okay. All right. So look, net, the way to come out of this story is that everyone's going to we're going to understand as the policies start to come out, we're going to go country to country, sector to sector, and we're going to make deals.
And a
That's
lot of
what
it it's the uncertainty over what impact these tariffs will really have. If you go back to the tariffs that he put on in the second half of his
first
administration, it actually, in reality, had very little economic impact on the American consumer.
Okay. All right.
Okay. But it's the old saying: the market loves good news. It can deal with bad news because it can still model it. It
Right.
just doesn't like uncertainty.
Exactly.
And there's uncertainty as to what tariffs are actually going to be
imposed.
Imposed.
Right.
How long will they be imposed for, and what will the economic impact be?
Good. And that's
hard to model right
exactly,
now.
and that's still an unknown. But granted, look, we were a month into this administration. We've stirred up this box. This is like, look, how do things grow? You stir up the earth and the dirt, and you rake it, and you make it grow, and that's where we're at.
And the other thing that I think is worth talking about right now, because it's very timely,
Tell
and
me.
not too many people really are talking about it. And I think it's a direct result of some of the impact from Doge so far.
Okay.
The 10-year note is
Right, talk about that, right?
is at 4.25%, maybe 4.3%.
Okay.
Now, 2 months ago, the 10-year note was at 4.6%.
And as that lifted, the market was under
4.7%.
pressure.
And on many occasions, as the 10-year note got closer to 5,
Right.
the tech stocks would get hit for a couple of days
Right.
and then come back and make new
Right.
highs. Then the 10-year note would go higher, and they would hit again. They'd
Right.
hit again. Well, now that's down,
Right.
significantly below 4.5,
Right.
at around.
So
I didn't look
maybe
at it
that's
before,
one of the things that's supporting.
4.3%.
So is that one of the things contributing to the support that the market has? Because with all of these unknowns as you described,
it
we are
should
still
be.
trading at
Right.
43.8 on the
Yeah.
Dow. We're
Yeah.
trading right below 6,000 on the SPY.
Yeah.
We're trading at 21
Right.
plus thousand on the Nasdaq. Net
That
net,
will
we are
and-
still trading at
Yes,
close
that
to record
will
high.
and should give some support to the overall market. It has not yet given a lot of support to the tech market. And I
Understood.
just think the tech tape is still suffering from a little bit of exhaustion and people being a little overextended in that sector from the dominance that sector has had over the last 2 to 3 years.
Locked in a record high in the market for the short term, okay? And then we suddenly had this spiral down, which lasted 4 weeks. I know if I were to ask most people how long that pain was lasting, because everybody felt the pain. Their 401ks became 301ks. Everybody was fearful. Do I sell now? What do I do? Everything looks terrible. Why didn't I sell before the inauguration? I mean, shoulda, woulda, coulda was all over the tape. And so it's like, so we have, if I were to say to you, how long did that pain, that dark cloud last? People would say, oh God, I feel like I've been in it for months. It was literally 3.5 weeks, right? From peak to trough of February 19th down to the short-term low that we're seeing that we just said probably is a short-term year low, which we just experienced recently, which we are already climbing out of. So last week, we started to see a turnaround on a Friday ago when, the narrative stopped being a constant barrage by the White House talking about nothing but tariffs and a lot of indecisiveness. We're going to kick it down the road. We're going to be aggressive. We're going to be fast. All kinds of, like a nothing burger in a way, because net, it was just posturing, at best, right? And so the market sort of finally read it and they go, oh, wait a minute, we're getting fooled here. We're being played a fool because nothing's changed. Nothing's fundamentally changed, yet the stock market is off 10, 12, 14, 15% in correction mode, bull territory, right? And why? The silver lining is that something that can go down so quickly and so fast and so aggressively, down double-digit percentages, can go way back up just as quickly. That's the silver lining of this whole story. But that was the beginning of the turnaround. Then Monday, we had a little bit of a follow-through. Tuesday was a little weaker. Nobody knew what to do, thinking about what was going to come on Wednesday. Wednesday was the Fed meeting. 99% chance of no interest rate cuts. I was hoping and manifesting a secret, that it was going to be a surprise cut and that the market was going to go up 2,000 points. That did not happen. The silver lining of the Fed meeting, which always happens in the news conference by Jay Powell, you should all be watching at 2:30. The number's one thing. 2:30 is where the rubber meets the road. And what he said is he thinks everybody's fear about what the tariffs are going to bring is overdone. And that if there is going to be a major economic impact of the tariffs, whoever and wherever and how much and whatever is already baked into the market, meaning that sell-off we had is probably the worst it's going to get. And that's when the market turned around. It was 247 on Wednesday, and the market rallied 94 handles on the S&P, from dark red to screaming green, right? We sold off a little bit off that end of that day. We pulled in about 30 handles, but the aggressiveness and the determination and the clarity of the rally got locked in, and it was amazing. Truth Social, Mr. Trump, at the same time that Jay Powell said, we're probably going to have 2 cuts this year. I'm not going to do this cut now because I don't feel it's necessary or warranted. Mr. Trump was aggressively talking at Mr. Powell saying, don't you see where the market's been in the last 3 weeks? You should be cutting rates. And that kind of signified to me that that's what this was. It was almost like a setup, right? Nothing against the president. He's the one running the show. He's the new sheriff in town. It's all good. However, what was happening was that anxiety he was pulling the market down almost to fulfill that prophecy, which he wanted, which was to cut rates, right? So I'm going to toss it to you.
That's like an awesome summary, I think, even of like the last 3 weeks, because the fears that tariffs going to lead to inflation.
Recession, they were using the R word.
The R word. Can we hit a technical recession? other countries saying like American exceptionalism, we'll call it, is gone.
It's gone.
But the reality is like, and me and you always talk about this, you gotta take away the noise and understand like this is all a game of high stakes poker. The tariffs were never gonna be that draconian. It's to ultimately get Canada, Mexico, reciprocal countries, China, to the negotiation table.
That's right.
Streets seeing through this and realizing that this could basically be a growth hiccup, or we'll call it a pullback, but it's not going to stop this tech bull market. And I continue to believe like tech stocks will make new all-time highs in 2025.
So think about that. So, you know, look, I know you may think that we are the forever bulls and we're always looking at the cup half full, not half empty, but that's not always the case, because if Dan felt, right, and I defer to Dan because I know I look like Einstein, I'm not that friggin' smart. This guy is smart. He would not be saying what he says when he talks about the second inning of a 9-inning game, or 4 p.m., 8 p.m. at a party that goes till 3 in the morning in this industrial, amazing tech revolution in AI that we're in the middle of, or in the first innings of, right? And that even when we've seen these pullbacks, these sell-off, these consolidations, we're not talking crashes, we're not talking recessions, that we're not even in that ballpark, right? But he says it with conviction for a reason.
We're in year 3 of a 10-year build-out. I mean, no, I'm saying that's just the reality.
That's where we are.
Deepseek, everything, the reality is, look at Deepseek. I mean, everything that's happened in Singapore, now you've realized that those were next-gen NVIDIA hardware.
Right.
And you add 2 commas to the 6 million. That's what they spent.
Right.
So what that's importantly does is it takes away that view. CapEx overbuild. Where's the AI use cases? But look what's happening now. Oracle, Palantir, Salesforce. You're seeing day by day more and more enterprise companies are saying this is where enterprise spend is.
Right.
And we think it's up to 10 to 12% IT budgets in terms of when I look at AI.
Palantir 6% up today already on day one of this rebound rally.
But it goes back to the whole, if you believe, and that's what we spend all of our time doing, that we're in year 3 of a 10-year build out.
Right.
You could have these bums geopolitical, you know, and macro,
or even just chatter, or even sort of, it's almost like espionage. I mean, it's just a story. It's chatter.
But if you believe that China tech or Europe markets are going to outperform U.S. tech, where the AI trade is in the U.S., that's, to me, that's just a fool's game. I'm not saying that there's not going to be trading opportunities here and there, but it's our view. That's why, like, this is a tech tape where NASDAQ will still be up 15, 18, 20% for the year, despite starting in the hole down 15%.
So, you know, when you talk to somebody like Dan, who has experience, who's seen bull markets, who's seen bear markets, who knows how to take away the noise, right? That's what a lot of this is. You know, whether it's coming out of the White House or it's coming out of mainstream media, you know, whether it's coming out of Deepseek or it's coming out of, you know, those people who are, you know, messing with the game, right? You cannot be swayed by that. It's not like a seagull in a hurricane situation here. You cannot be swayed every time. This is part of what happens. A bump in the road, a pebble in your shoe. You've got to get over that. And we always say this, if nothing is fundamentally changed in the story about individual names and stocks, well, then you're not here to be selling them. You're here to be buying them, because once again, it's not a chance to sell, it's an opportunity to buy.
And it's like what we've talked about with Tesla over the last week and a half, like tough time in Tesla, given political you know, blowback in terms of Musk, Doge, brand, crisis. But the reality is that, like, that's another one, like, been here, 6 times we've had Tesla sell off 50% peak to trough.
Right.
So the point is, like, this is definitely a white knuckle period.
Right.
But I believe autonomous and robotics will essentially be owned by NVIDIA and Tesla.
Right.
So if you believe that, this is not a time, just because of the panic and it feels bad.
Right.
I view it as almost an uncomfortable time for growth investors.
Right.
But uncomfortable is not bad.
No.
It sometimes means those are some of the best opportunities.
Also, it's April 2nd, the day of liberation, where Mr. Trump was going to call a news conference at 4 p.m. and lay out the law on tariffs, who, where, what, how much, and the whole plan was going to be laid out. From my point of view, is what I've seen as a broker here on the floor. On Friday, we started the triple witch, quad witch, right? Serious volume coming into the market, dollars being deployed into this market. It started to feel like a turnaround. On Monday, the last day of the quarter, okay, and you don't know this, but on Monday, the last day of the quarter and the last day of the month, we had the largest imbalance in history of dollars coming into the market on the close. $14.6 billion imbalance at 350 at 4 o'clock at 350 on Monday. Ever. Wow. 10 billion in the S&P and 14.6 billion in S&P NASDAQ together. That is serious money coming into the market, and I believe that was money being allocated. It wasn't a short cover. It wasn't window dressing for the end of the quarter. I believe it was money being put into the market, okay? And that was significant. When you see intraday reversals, to me, that's a good sign that things are starting to turn. So you are so generous to come and hang out with me today.
Well, first of all, I thought, like, the way that you just summarized that, tear to my eye. No, because that's exactly brings you to where we are today.
Exactly.
And I just fundamentally think the administration behind the scenes over the last 48, 72 hours has basically realized, got to take a little step back. Like, I think you're going to see maybe a softer tone in terms of the because the reality is a U.S. car with U.S. parts is a Pinocchio fictional tale. The average U.S. car company that makes cars in the U.S. gets 40% of their parts from international.
Correct.
So to say that you're going to tax 25%, the average car price will go up $5,000-$10,000 for U.S. consumers.
For U.S. cars.
And at the end of the day,
we saw that with Ford and GM.
Tariffs, Reagan's talked about it, anyone else, tariffs are basically a tax on consumers. There's no really debate.
Correct.
So I think now the big question is, how do they handle China in terms of the markets? Europe, probably a harsher sort of tone because of the VAT and some others. China, it's probably a little kid gloves. That's sort of my view. That'll be very bullish in terms of that, in terms of on the China
our tone with China.
Because ultimately, China holds the keys when it comes to semis, chips, this. TikTok, another chip on the table. I believe TikTok deal probably happens in the next 24 hours. And that's going to be one where it's like ByteDance could keep the algorithm. That's a little plain nice in the sandbox. Oracle and some other investors probably get the ownership. TikTok doesn't get banned. China is like, okay, I appreciate
We're
that.
nice. We're starting to play nice.
And I think the levels are basically 15 to 20%. Any sort of 15 to 20% number, universal, would be viewed probably net bullish from a reciprocal. 20% is where I think is priced in. Over 20% and harsher, market sells off. So
what
I think
a reciprocal tariff?
Reciprocal basically means like you tax me, I'm taxing you. But if you tax me at 40%, I'm going to be the nice person and I'll still tax you only at 15, 20%. So I think this is all some of the nuances. And then the big question is, what do the off-ramps look like? Is it kind of like, okay, all of a sudden like, Vietnam, they signed no longer. I won. So it's like it's trying to understand like what the off ramps are in terms of getting deals done, negotiations. That's going to be some of the keys to kind of read in between the lines. You know, when we see this today.
So I'm always looking. What was the motivation behind the way the last 6 weeks have evolved unpack? Do you think it was all about bringing people to the negotiating table with net? My goal was to make a deal, and that's the way I do it.
And let's call it like it is. They overplayed their hand.
They did.
I mean, there's no
question about it.
They thought China would be like, oh, where do I go? Who do I call? Mexico, there. EU be like, oh my. Instead, they're like, we're gonna. And I think they overplayed their hand. The market spoke. Markets are not Republican or Democrat.
No, they're not.
As you always say, like markets speak to what's truly happening. Trump watches the market every minute.
Of course.
And I think the reality is they recognize if you have a misstep here, you go into any sort of recession, You lose the midterms, the presidency's over.
Correct.
Democrats win it. Last 2 years, it's basically, a stalemate presidency. Trump's done. J.D. Vance probably done.
And look what happened. Like, go ahead.
Listen,
Sorry.
I'm just saying, I think they recognize you can't play with these third rail issues so haphazardly.
Right.
What happens if I press this button?
Right. So I think maybe they underestimated the intelligence of the investment community.
I agree.
Right? And I think that there were some people got scared, people sold stocks. We always know that, you know what, when markets are going down, it's the time to buy, not a time to sell. So those who were selling, it started to look like we were really starting to break down. Right? And so I can't identify who was selling and who was not.
But then where the money was going, Europe has been a double-digit outperformer.
Right.
You've seen global money go to China. Right. So the other thing is, I think they're very well aware, money's not just going to bonds.
Right,
gold.
exactly. It's going out of the country.
And
so we've completely defeated our. We're doing this despite our face.
It's
right. You're cutting off our nose despite our face.
It's like me intentionally stabbing myself with an envelope opener for no reason.
Yeah. We are off the lows. We have had a couple of bounces, but clearly that. To the point where Mr. Cramer, right, deep respect for Mr. Cramer, actually said, what is it going to take for people to start buying stocks again? People have been shocked and awed by the uncertainty and the madness coming out of the administration. They are talking out of both sides of the mouth. And there's all due respect to the president. He's the new sheriff in town, whether you like him or not. This isn't political. It's a matter of a market that is going through turmoil, right? We are talking about trauma. People's 401ks are looking more like 201ks. A lot of money, trillions of dollars, has been taken out of this market. And so what we want to do on a day-to-day basis is try and make sense of what's going on.
And ultimately, you've talked about it so much, it's like you got to get deals on the table. It's
talk is cheap.
But you got to get deals on the table, and you need de-escalation because time's ticking in the reality of all the products coming out of China, the raw materials that's been cut off, the tariffs. We're talking now 2 weeks, 3 weeks. Then consumers are going to see it. You're going to start to get the emails. Due to tariffs, we're raising our prices. We have shortages. And our whole point is that you're going to see Trump administration continue to take steps back. You're going to have to get deals on the table. And then you're going to have an earnings season. You'll have minimal guidance. Street basically is going to discount, mulligan we'll call it, June and September quarters you're basically going to throw out.
Right.
You're going to start looking at 26 earnings in terms of valuation.
Right.
And that's how you're going to navigate this period. But the names that you want, whether it's NVIDIA, Apple, those don't
Target,
change.
Walmart.
Those don't change. It's about levels and what the variations are in terms of tariffs and what that means for businesses. That's the reality.
Okay, so what Dan is really basically saying, we're at a point here right now where this is starting to affect the economy. Growth is being affected in a huge way. Companies are so uncertain they are not even able to offer guidance. When you know what guidance is? Guidance is earnings are what happened last month. Guidance is what's happening next month. When you don't know what the tariffs are going to be and what products are going to be tariffed, what countries are going to be, right? You don't know. Look, think about the complicated logistics of boats full of containers coming out of China trying to get to America. We're already talking about that there may be an interruption on products getting in here for Christmas.
But it's going to make COVID disruptions look like eating a sundae.
Really? You think it's that crazy?
Look at the boats. Right now, if you look, it's double the amount of cargo ships idle outside the major ports in China, just even in the last week. Double. So what's happening is those ships are just piling up. No product, nothing's being shipped here.
Right.
You got 2-3 weeks inventory. And that's the reality. Time's ticking. And until you understand rules of the game, none of those companies are shipping with 245% tariff. So this is what we've learned.
Okay.
And then you've learned that customers are not pulling back. They're continuing to plow ahead with AI projects.
Okay.
And I also think many customers view it that when deals get done, and they will get done, they don't want to be sitting there pausing projects, then having to restart them. So it's also, as much as me and you always talk about deals need to get done, markets for... enterprises are basically, they know that that's going to happen.
Right.
So the last thing they're going to do is just change their CapEx, change their hiring, because of ultimately, I believe we're talking what's going to be a temporary period with a lot of these,
Okay, so the narrative we're talking right here is a lot different than we've been talking for the last number of days, right? We've been laying out a scenario that is not as positive of what you're saying, and I I agree with you because my narrative has changed in my head.
Well, I think it's bifurcated too in terms of narrative.
Okay, so let's talk. So we had a couple companies that came out with earnings that were disappointing, like Apple last night and Amazon.
But I'll caveat that.
Okay.
I would disagree that they were disappointing. I'd say that they were. I think these are stocks over the next week that are going to be higher than they were before they released earnings.
So it's an emotional reaction.
It's an emotional reaction. But also when it came to Apple, me and you have talked about tariffs. They've been able to navigate because of India much better than anyone would have expected.
Even though they said it's going to cost them $900 million.
The fears were ultimately we're talking $3-4 billion a quarter.
So it's so you're talking right. It's kind of like there's no food. We have absolutely nothing to eat, but we still have a little bag of caviar.
Look,
right? You're going to starve to death, but you're going to live on caviar for the next.
And
year.
I'd say essentially what Apple has been able to do in almost a Hall of Fame move.
Right.
They were given the flexibility because of these tariffs, the 90-day pause.
Right.
Apple behind the scenes has aggressively basically now gone right after India as the core market.
Wow, okay.
And ultimately, when it comes to China, they're going to be exposed, but India has given them the ability to basically diversify their supply chain in a matter of...
When did we find all this out? Because we haven't been this has not been part of what we've been talking about.
So this has been, it's been happening...
A little birdie speak in your ear last night?
So it's been happening slowly.
Okay.
But what they unveiled last night...
Okay. Where was this?
Was a game on their conference call.
Really?
It was a game changer.
Wow. Okay. That's huge.
And let me just put some numbers.
Yeah.
They were doing 5 to 10% of iPhones from India.
Right.
You know what they just did this last month?
And so 90 was coming out of China.
50% from India.
Really? Okay.
Like this.
So they pivoted incredibly quickly.
They pivoted in a way
that's unheard of.
That I think decades from now.
Right. We're going to look back at this and go.
One of Tim Cook's biggest achievements
will have been this.
Will have been this. So here's the other thing. Something might not come from China per se. It could come from Italy. But maybe the packaging comes from China.
Right.
I talked to a makeup company today.
Right.
Their makeup is Italian, but it's packaged from China. Guess what? That makeup can't be sent because there's no packaging. That's part of the problem here is that even when it comes to auto parts, where are a lot of engines in terms of manufactured? Of course, Korea, Japan. So much. There's 30,000 parts in a typical car.
Really?
The vast majority of that comes from outside the U.S.
Right.
And those are the issues you talk about. Mattel,
right?
GM, Ford.
Right.
Remember, the autos they're dealing with not just on China, the NAFTA, the Mexico and the Canada issue. So when you combine Mexico, Canada, and what's happened in China, it's a perfect storm. Not necessarily for tech companies, but especially when you talk about so many of the products that we buy.
That we use on a day-to-day basis. I mean, we are the greatest consumer society in history.
4% GDP in terms of population.
Right.
I mean, we're 4% of the world population, 26% GDP.
Right.
And I think that's part of the issue right now in terms of where this is all heading.
Okay, so what Dan is trying to say to you is, if you go think back to COVID, think back when we didn't have the things that we wanted. We are a very entitled society. Whether you're living paycheck to paycheck or you've got a lot of money, we instantly think we have demands, we have desires. There's things that we need in our day-to-day life that we think, we up until COVID, I don't think anybody in our life or in this generation ever thought that they would not be able to go get toilet paper, alcohol, paper towels, whatever it may be. Imagine that, right? And think back to what that was like, to not be able to have the things that are basic needs. And that's potentially what we're talking about.
Self-inflicted.
Correct.
It's self-inflicted. And the problem is that, let's say this weekend, Besant, China, and they're like, okay, we're lowering tariffs to 80% from 145%.
Okay. In China, from China.
Is that moving it? It's 80%.
Right.
So you really need to get down to 20% to make it tenable. And I think part of the problem is, but even let's say you started today and you actually lowered it. Let's say Tuchman Shipping Company.
Right.
That's in Shanghai.
Right.
If we just started this weekend, you're still now backed up 6, 8, 10, 12 weeks or more.
Right.
You can't just all of a sudden start.
Flip this and turn it on. You can't hit the switch.
That's the biggest concern.
And 2024, great year, up double digits, right? A little bit of wild card coming into the end of the year. I think in retrospect, we look back and go, if anybody was sort of 80-20 equities to cash coming into the new administration, even if they were Republican or not, and this is not a political statement, I think people having locked in 2 years back-to-back of over 20% probably would have switched out and gone 80-20 cash to equities, just trying to oversee what the next wild card was going to be. And I think if we look at it in retrospect now, because we still don't have, I think there's a lot of backdoor diplomacy going on.
Sure.
I think there's got to be some kind of a deal with China. UK is coming up. EU is in July 9th. There is a lot on the table that we maybe don't know about, even though they claim deals were done back then. We still have really good earnings last quarter, although the guidance was troublesome. We talked about that a lot. But why are we at record highs still with a lot of the uncertainty around? Yes, we got our attention diverted by the war in the Middle East, but with all that, plus the Fed, plus the deals on tariffs, and we're still trading at record highs across there. Give me your best bet. Give me your best explanation.
So first off, like coming into the year, remember there was Deepseek.
Right.
In terms of the China scare, markets got crushed. If China could do it for so cheap, why can't...
That was like January, beginning January.
And then as more came out about it, you basically had 2 commas to what they said they spent.
Right.
And they were using NVIDIA hardware.
Right.
So to some extent, it actually solidified the view that there's one chip in the world fueling it in terms of NVIDIA.
Right.
But then you go through, like, call it Jan, Feb, markets kind of trotting along, still under pressure. And then when you think about, it's all about big tech. And this is really, to me, all I wouldn't say all that matters, but what's really driving it.
Right.
They're spending $325 billion on CapEx for AI.
Just NVIDIA or
Just
the tech sector?
Just
big tech is.
When you look at Mag 7,
right, okay.
$325 billion, $100 billion increase year over year.
Okay.
And guess what? That number is conservative. It's probably going to be 50 to 75 billion higher when it's all said and done.
Okay.
Now, sovereigns, governments haven't even started.
Okay.
They're going to start to spend.
So there's catch up.
Huge catch up. Middle East wasn't a market. Now it is.
Right.
And then the biggest black swan event, Iran, is gone. Right. That's done in terms of nuclear threat. I think when you think about tariffs, I mean, you've talked about it for many months.
Right.
Administration just taking further and further steps back, de-escalating.
Okay.
That you're essentially going to have a 10% base tariff and some sort of reciprocal tariff, 12, 15%.
Okay.
That's digestible for the market.
Right.
At the same time, inflation is rolling off. If you look at it in terms of the core numbers.
Right.
Fed is probably going to cut 2 times the rest of the year. So in that scenario, market goes higher. So I think 7,000 S&P.
I have the hat.
You have it. 23,000 NASDAQ as we go into year end.
Right.
Now look, we could go lower before we go higher.
Okay, that's legit.
But in terms of the dynamics,
Consumers holding up well.
Yep.
Employment.
Bank stress tests, spectacular.
Stress that you look at like ADP week, but unemployment, I think, pretty stable.
Right, jobs number was okay. The only thing that was a little weak was retail. And I think that was a function of the higher cost with tariffs, at least whatever tariffs, right?
And,
was
look,
that?
and you're still going to have some of those higher costs from tariffs that come in.
Right.
But what's starting to happen now is that given the de-escalation, it's something where, okay, that gets passed to the consumer.
Right.
But if China deals get done, Vietnam deals, India deals, then at least you start to have
You always talk about market hates uncertainty.
Right.
But now, then you start to have a better framework of what this looks like going forward.
So we went through the February sell-off into the April 9th. We went through that because it was nothing but uncertainty and nothing but surprises by Mr. Trump and the way he disseminated information. And at one point, I'm going to quote this gentleman, it was economic Armageddon, right? And that's what it looked like. We could not, when we were in the bowels of April, and we were down more than 20% in an 11-week sell-off from February 19th to April 9th, we were standing here looking and talking to each other and asking ourselves the question, will we be looking back at this time as a time we should have sold because it's going to get a lot worse? Yep. Or are we going to look back at this time as a buying opportunity as we looked all through 2024? We know that there were about 6 or 7 sell-offs, consolidations, pullbacks in 24, every one of them. From the April, from the July, from the September, from the August 6th crash, from the October, November, all of those sell-offs, consolidations, and pullbacks were nothing more than a buying opportunity. Once again, we can look back at this episode that looked dark when we were in it, and I think I mea culpa about it, and I think you did too in a lot of ways, where at the time, we could not put ourselves in Mr. Trump's head to know what his next move was going to be. And I don't think he knew his next move. I think, fortunately, as unfortunate as it is that global confrontations happened, that his attention got diverted, right? And that took our energy and our focus away from the tariff story.
And Besson became the adult in the room, Navarro and Lutnick more to the back of it.
They're on the milk carton wondering, like, where are they?
But I think that's an important...
Yeah, you're absolutely right. Hey, everybody, I'm the Einstein of Wall Street out front of the New York Stock Exchange with my man Dan Ives, #1 tech analyst in the world. Markets trading at record highs, even in the eyes of all the crazy uncertainty. Still, there is a reason. We're going to break it down. Tesla earnings, so much on the tape. We're here to break down the story. This is the big breakdown with Einstein and Ives, my man. Let's talk. Tesla earnings yesterday. Let's just break out right out of there. Talk to me. They missed on both.
No doubt.
The stock's down $21. Where do we go with that?
I mean, look, my view, and you know this, this is an AI company.
Okay.
It's about autonomous robotics.
Right.
Is it going to be great in the next...
So it's not a car company.
Look, I believe you had a car company.
Right.
You now have an AI company.
Okay. That's super important for you all to know.
We're in a transitional period for Tesla, going from an EV company to what I view as the future in AI.
Gotcha.
Now, the next few quarters, it clearly could be choppy from a delivery.
Understood.
But we believe $1 trillion of the valuation is AI. The next year, you're in 25, 30 cities in terms of robo-taxi.
Okay.
So when you have sell-offs like this, just like me and you have talked about before, from NVIDIA to Microsoft, and we'll talk about Alphabet and others, I view these as the buying opportunity.
The buying opportunity. So think about it. Why did it sell off? The main thing that came out in the conference call was because auto sales were down. Not because of any of what's going on in the infrastructure, not anything about Elon Musk, so if you're thinking of the company now as transitioning from being an auto EV company to an AI company, the next couple of quarters are still going to be extricating that part of the story to be AI, and that's where it's going to get its boost.
It sets up for what I view as the two biggest AI stories.
Okay.
When it comes to physical AI, autonomous and robotics.
Right.
It's NVIDIA and Tesla.
Right.
So, look, I just view it as, okay, is it some short-term pain? Yeah. But we've been there before.
Right.
So we don't, $500 PT, we're unfazed.
And look, everyone needs to understand that, stocks have their inert or innate value, and this company's got multiple components that make up its value. One of its was an asset for a while, maybe a little bit of a liability, is the relationship with Elon Musk and Elon's relationship with the president and all of that chatter, right? Which is meaningless. It does not really have anything to do with the company per se, but people's perceptions get locked up in that.
But I also think it's getting less political. I mean, in other words, I know he did the third party, but you are seeing him back off and become more of a
businessman.
A wartime CEO.
Yeah, and I love that. Okay, that's good. The Fed meeting yesterday, we talked about it. I kind of thought we should have pivoted. I just had a nice chat with Steve Leisman, who said, why would you overrun an engine when you don't need to do that, when you should back off? I kind of think he's in the same school as you.
But the data if you look at the data that just came in, it supports now those two dissenters that they should cut.
Really? So you're saying that because what? Because unemployment went to 4.2 from 4.1, and they revised the employment numbers? So you're saying we should have cut?
I'm saying it now gives a path to cut in September.
Okay, fine.
But look, if you look at big tech,
But we didn't know that yesterday.
You didn't know it
Right,
yesterday.
yeah.
But so now think about the market setup. Markets pricing in 2 cuts rest of the year. So
Really?
now markets pricing in 2 cuts rest of the year. You combine that with strong earnings from Microsoft,
Right.
Amazon,
Meta, right.
Overall big tech. It shows the AI revolution is going into its next stage of growth.
Okay.
So that is a great combination once the Fed starts to cut into a market that goes up significantly.
Right, but today we're under major pressure here. We're down 100 plus points on the S&P. What is that a function of, in your opinion?
Because markets basically saying Fed was late to the game.
Oh, that's
the
right.
unemployment numbers are
Really
really disappointing, and they're basically saying you got to start cutting now. The dissenters are right. So the market, if you saw, trade off big
Right.
and now coming back because
Right.
now markets basically saying, guess what? Cuts are happening sooner.
Can we talk for a moment? The best dressed man on Wall Street, number 1. The smartest man on Wall Street, number 2. And this is the new drip. Forget about it. You guys are going to stand in line for this drop of drip. That's a drip of a drop.
This is my collab with Snow Milk.
Collab with Snow Milk.
Great Brooklyn designer. We've been doing this, the last few months designing it, and you get on danivesclothing.com.
danivesclothing.com. Dude, I'm getting goose. I'm kvelling. I'm kvelling over it.
So good.
So talk to me. Like, we've got all this economic data coming out. We had that funny week. We had Wednesday where the Fed had an opportunity to pivot and they didn't. You didn't think they should have. I thought they should have. There was dissent amongst the ranks. That day was the day that 2 Fed governors did dissent. First time since '83. That's all fine and good. Why didn't he pivot? Well, he did pivot in a way, but look, he did not cut and he did not give us an inkling what was going to happen in September. However, 2 days later, we started the barrage of economic data coming in, like jobs number, worse than expected, unemployment ticking up.
And that proved that the centers were right when that job data came out.
Say that again?
When that weak job data came out
on Friday,
that proved that the centers basically were right.
Okay. The dissenters. Correct. So think about that. So 2 of the Fed governors disagreed with Powell to not cut. They felt we should have had a cut. And that was validated 2 days later by the fact that the data that came out and has come out since, PPI, CPI, unemployment, and those jobs numbers validate that they were right. The dissenters were right. Now, where does that put us? It spiked up. The probability of a cut spiked to 90%.
Yep. But then, ultimately, if you look, we'll see in Jackson Hole with Powell in his speech, but now I believe it's pretty clear Fed's going to cut in September, so you're going to get 125 bip cut.
Just 25.
But then we probably get either another 1, potentially 2 more rest of the year.
So 3 cuts by the end of the year. And look, we're not advising you on anything. We're not telling you what to do. But Dan has an amazing ability on analyzing this information, and it's a lot. It's economical. Let's think for a minute. So, Bessent, right? Ludnick and Bessent, done, deal, has called for 150 point cut. Yeah. Now, do you think by year end we'll have all that?
You probably get 50 bips by year end,
right?
And then by early next year, 75 bips. So I would say half of what they're calling for, you probably get by early 26.
Okay.
Now look, some of the data that came out this week on PPI and the produced, that definitely showed a spike. The question is, does that cause the Fed to take a step back? And I don't believe so. I believe that's one. I'll be afraid to call it transitory because obviously the tariff impacts are starting to happen.
Well, we're seeing that the tariff impact is notable on inflation with the PPI that came out, right?
Totally. So I think that's starting to happen. But basically, Fed at this point is like, look, we get it. But based on, if you look at just all of the sort of signs, slowing growth, economic picture, Fed's basically going to have to cut at least twice, potentially a third time, And I think that's the reality now the market's pricing in.
Let's explain to everybody. Consumer price index
Right.
is
Inflation.
the price. It's inflation. It's the price that it is the cost to the consumer, probably as a function of the increase in everything because of tariffs.
Right. Now we know that that gas prices are down quite a bit. That's something
They're down
that
because the
people
price of oil is
usually
going down. But what about what is going up though?
Well, now housing is still a little elevated, but that's been a very deceptive stream
Because of
of
the interest rate
data
environment.
because a lot of people have these mortgages in the high 3% or 4% handle on them, range, 4% range. A handle is the first number.
Correct.
So, and they would normally buy a house. A lot of people are ready to trade up. Get another house. Their family's a little bit bigger, but they don't want to go from a 4% mortgage to a 6.5%, 7% mortgage.
That makes no sense.
Because then even if they get, it's probably going to be a little bit of a bigger house if they're trading up, and B, the rate's going to be higher. That means their monthly payment's going to be a lot higher. Okay. So the housing market has been frozen, and where you will hear a lot of economists and a lot of very smart economists on TV talking about how, the economy is really fine and the GDP numbers have been strong and the consumer is doing well and productivity is going to be going up. And that part of the economy and the world doesn't really need lower interest rates. The housing market is frozen. And it's a think about buying a house. If anyone's ever bought a house or built a house, all of the little tentacles that come out from that house.
You tell the story better than anybody.
The painters, the people that put up the drywall, the plumbers, the electricians,
the roofers,
the landscaping people, the people that put the
these are all employees and people working.
And then the local delis that. Whose business goes up because all the workers are buying food, more food. All of that has a huge collateral impact on local economies, and it's frozen. So that part of our world or the economy really does need lower interest rates. The concern is that it would spike inflation on the consumer sector. So you get a number today like 3.0, much less than what people had feared, and maybe a tick below consensus.
Didn't the number come in at the highest inflation number we've had for a while? That's what some people read it.
Okay, so look, one of the reasons this number came out, even though the government was shut.
Well, let's explain that.
I'll explain how that.
We've been shut for 4 weeks.
Okay.
The fear was a couple things. Besson said if we're closed for more than 3 weeks, it's going to impact the GDP by as much as a 1%. That did not scare. I know, but it did not scare anybody.
Nope.
We thought
because there'd be a one-off thing, it'd be made up the next quarter.
Exactly. And think about it. In the world we live in 2025 with AI and all that stuff, you're telling me that irrespective of the government being shut down, why can't we come up with numbers?
So we did
Why
not,
can't we come up with a number?
Because let's get back to these economic data numbers, which we did not get the employment numbers.
For 4 weeks.
We did not get the employment numbers the first Friday of October because the government was shut down.
Correct.
But we did get the ADP numbers, and ADP is the payroll processor that has a lot of data on jobs, and their data is more like hard data because they process payroll. So because of what they do,
it's real.
They have real data where the government job numbers come from surveys.
So why wouldn't we go for hard data?
And then when they get their data coming in, we get revisions, and the revisions have been much more extreme than they've ever been.
The last one was 880,000 difference, right?
And that's been and the same thing the previous year, and that's been the controversy over that part of the data. But
forever.
So the government shut down. Most of these numbers come from government agencies, Department of Commerce, Bureau of Labor Statistics.
Okay, that makes sense. Gotcha.
Okay, now, we did get CPI numbers today. And the reason we got CPI numbers today is because the government repositioned some employees to go over to the either the Bureau of Labor Statistics or the Commerce Department and do whatever they had to do
give us a number.
And call in some people that are familiar with the process to get the CPI number. The reason we needed the CPI number is because the Social Security Department needed that CPI number because it's a 12-month trailing average of October 24
Right.
through October 25,
Right.
that the Social Security Department needs that CPI number so that they can calculate what the COLA, cost of living advance,
Right.
what the cost of living increase is going to be on everybody's Social Security checks for next year.
Wow.
And they
Okay.
so they need that data in the system. So within 30 minutes of the Commerce Department saying, okay, look, the CPI for October was 3.0, all of a sudden then 30 minutes later, the Social Security Department says, okay, the COLA increase for 2026
We immediately got an adjustment.
is going to be 2.8%, which you would think that you're supposed to adjust for the rate of inflation.
Right.
Meant decades ago when inflation went crazy in the 70s, they said, look, seniors are getting killed. We're going to start to increase your monthly your Social Security payment by according to what inflation was for the prior year.
Right.
So, and now they have the inflation number. So now they come out and they say, look, your Social Security check, if you used to be getting $3,500, you're going to get 2.8% more than that next year. But that's why this number came out and all these other numbers haven't come out, because the Social Security Department needed that. The Social Security Administration needed that number to put into their computer to show what the increase of everybody's Social Security.
I mean, when you think about in this tech trade, the golden childs are really NVIDIA,
Right.
Palantir, Microsoft, wow, the Max 7.
Right.
Palantir, those earnings were off the charts. Like
Good chart. Off
I
the
mean,
charts, good.
The Street was thinking 85% growth. They came in 120%.
Unbelievable.
So it was almost a quarter, Picasso-like quarter.
Right.
And the stock sold off.
8%, 9%.
So investors were like, hold on a second. If they did this and this is as good as it gets, perception,
Right.
what does that mean? Is that, and then it goes back to the bubble moment.
Right. Which
Is
has
this
been a bit
bub-
of chatter lately, everybody. Everyone's looking. When the market is trading at record highs for so long, there's always going to be something, and tech particularly, there's always going to be somebody who's, those bears, right? The bears have not gotten their day in the shade. They've had to go back months ago. They went back in, they took their slushy, and an old piece of pizza went back into the barn.
Because the bears are in the basement. Mom's bringing meatloaf down to the basement, and the bear.
Hey, Ma, give me the meatloaf.
And the
Hey, Ma, give me the meatloaf.
and the bears, they're looking for something. They're looking for bubble.
Right.
Is there a crack in the AI trade?
Fragility in the market. This is too good to be true.
And
All
I
that.
think Palantir, because it's such a goal, the fact that it sold off, it created a ripple. And you saw tech stocks sell off across the board. Obviously Michael Burry, Big Short.
Right.
He
jumped on that train.
very
quickly.
well timed
Yes,
in terms of his
yes.
short. So it kind of creates that firestorm. But look, me and you have talked about it. We have 1 to 2 more years left in this tech bull market.
Right.
You're going to have these moments of
Right.
these sell, but I just view it as like it's opportunities to own the winners as the fundamental story. Think about pieces of the puzzle. CapEx,
Right.
big tech,
Right, huge.
accelerating.
Accelerant.
NVIDIA, chip, demand and supply,
Right,
10, 12 to
accelerant
1.
growth, massive
Palantir
growth.
use cases,
Right.
expand.
Right.
US, China, de-thawing, now there's a trade
Yes,
framework.
yes.
So look, I just view it as like it's a risk on, and you use these opportunities to buy more tech.
The government shut down, the government reopened. We had Palantir earnings come out. They were stellar. It was a 7-day buildup into November 3rd when the release came. And the stock sold off 8%. It took
Yep.
the market down a little bit with it. As opposed to realizing that one of the old Wall Street adages is buy the rumor, sell the news. When a stock builds up 7 days in a row, going aggressively higher and higher, trading at a record high when the earnings are released, as opposed to just saying, amazing, great, they did wonderful. People are taking a profit, especially with a lot of the uncertainty around everything else happening in the market.
Yeah.
They'd suddenly throw out this story that, it's such a non sequitur to suddenly say, when it's all about good news and it's a majorly easy explanation for it, to say that AI is a bubble, that this is all smoke and mirrors, that none of it is real, and that it really threw a complete wrench in the whole marketplace.
But me and you for years have gone through from Deepseek to White Note to Fed
Yes.
to tariffs to it. You have to be like, look, a week ago, the Fed's chances of cutting in December was 22%.
Correct.
Today it's 87%. I'm just saying, like, the way you make money in this market, you have to understand fundamentally what's happening. Palantir's a perfect example. Like, this is just early days in terms of what's happening. The stock could sell off, and it has.
Right.
But it's my view, like, we're only sort of 10% through
Right.
their opportunity.
So look, people need to understand that. So the message that Dan and I try to get out, we know that a lot of mainstream media tends to be catastrophists. They like a good headline, right? And headline, you know, if you give people a simple explanation of why things happen, it doesn't get as much of a headline as AI, which literally the guy here selling hot dogs, the guy driving an Uber, and the guy who's got a hedge fund that's worth billions of dollars all have exposure to AI. They know what ChatGPT is, right? When that is happening, it's amazing to think, why would you spin that story? And you're not going to get a headline if you give that explanation.
But the bears are going to continue to try to find ways to say, like, okay, this is
To
done.
sabotage the
This
story.
is, you know, like the Burry stuff, like,
Right.
maybe like, you know, OpenAI, too big to fail. This is the moment.
Right.
Look, the reality is, as I've said, like, the S&P 7000 hat, you were getting it made, you
Yeah,
know, and
we
we
had
can
them made.
by December
Yeah.
31st, because this is a market. We're going to be talking about S&P 8,000,
Right.
9 to 10 over the coming year. I'm not saying that in between you're not going to have sell-offs.
Right.
You're not going to have nervous points,
Right.
but we're sitting at a point where the best private companies in the world in AI are still private. Anthropic, XAI, OpenAI.
Okay.
When we get to the point where all these companies have gone public, and you know, as you see execution play out, you could then look at the market and be like, okay, maybe it needs to slow down, but I don't believe it gets there for another few years. It's more of a 1996 moment,
Right.
rather than 1999 bubble moment.
So look, we're trying to break down, because we have had consumer confidence back in February, March, and April when Dan and I started going on CNN. Consumer confidence when the self-inflicted economic Armageddon happened, with the new sheriff in town talking about disseminating information around tariffs and all that kind of stuff, and the market sold off in 11 weeks, down 20.8%, and the world was in turmoil. Markets were in absolute turmoil. Okay, and the consumer confidence went down to a level that was in the 88 range, right? Right before Mr. Trump came into office, it was at 112.
Yep.
It went down to 1, which is actually a net negative number. We've had a lot go on since February, March, and April, right? The market turned around. We made back at Liberation Day, Independence Day, all that kind of stuff. We've had a wild and woolly summer, right? Everything's been thrown at this market. We have 48 record highs across every indices since then. Okay, we started a interest rate cutting cycle, so we're in the midst of all that, and still we've got this scenario that is being laid out that is absolute kind of crazy, right? And so we have not seen the consumer confidence be as low since February, March, April.
But that's why
and it is now down there.
And you said, like, we disagree with that, but it's still direction. You're saying the Fed should cut 50. I was saying 25.
Right, that's fine.
Fed needs to cut. When Powell last meeting tried to be like, hey, not so fast, we don't know about December
Right.
cut. This economy, this labor force, this banking system, the
Right.
housing market needs cuts.
Right.
Now, is there still inflationary and some worries about tariff? Yeah, but the reality is, like, you're going to need like 75 bips to 100 bips of cuts
Right.
going into the next sort of year. Also knowing Hassett is going to be the next Fed chair,
Right.
who's dovish,
Right.
under Trump,
Right.
and you know now it's coming. That's why the 10-year is sitting at 4%.
Okay.
It's not 4.5. It's not 4. The 10-year is telling you it's going lower as cuts are coming.
Right.
Which also you could say is bullish for gold,
Right.
bullish for crypto.
Now, so look, let's talk about crypto for a minute. But one last thing. So, consumer confidence got knocked the heck out of it, right? Down into this level. We just went, so they started this scenario around Palantir, then everyone's fears around NVIDIA were the same thing was going to happen. They did not talk about the nuance of what's going on. We've seen this movie before. Palantir went up 7 days into the earnings. That's why there was profit taking after records, stellar earnings. NVIDIA sold off 3 weeks into earnings. That's why when they had stellar earnings, it rallied back. The story that the it's curious why the Fed, whether it was poking the bear or not, why at any point, even I know we're trading in the dark, we don't have a lot of the economic data necessary to make a decision. The Fed may not as well, okay? But the crazy thing is, how is it possible that they think that there was no, look, Dan said the chance, way back when it was down at 22% probability of a cut, Dan said that the chances of that being real are the same as him playing for Philadelphia Eagles and me playing center for the New York Knicks 25-26 season. That's how crazy
and then
that
at
whole
that
thing.
point, when we said, and then like obviously there was a point, and you're like, you still have confidence here.
Yes.
Because the reality is that the Fed, that mechanism, they realized when like the Cleveland Fed president's like, no cut, no cut.
Right.
Then Williams and others came out, 22% to 87%.
In a week and a half.
No,
In less than a week. Yeah,
in 9 days.
In 9 days. So we're begging you to realize that at the end of the day, we always talk about it, if nothing has fundamentally changed. Because at the end of the day, nothing had. There were stories, they were unpacking a bag, they were preparing their dinner, they were like, the Bears came out, he brought his big gulpy, of Pepsi, he had a big bag of Doritos and all that, and he started to feel his oats a little bit, right? He said, oh my God, look, even Jay Pow said that the chances are slim to none, or there is no longer a surety that we're going to have cuts. Right, and then it all turned around in a week. There are trillions of dollars have been rotated in that week. That's huge. It's not like a nothing burger moment.
No, and you've talked about it. We've talked about how you say like the deleveraging that's happening in crypto,
Right.
worries about the Fed,
Right.
worries about the AI bubble. But I think it just sets up for what's going to be like a market that we come back from Thanksgiving. I think it's a market that rallies into year end, Santa Claus, you get Hassett,
Yep.
another sort of bullish indicator, Fed cut, and then I think that AI trade, the one thing to remember too is like, I think they're going to allow NVIDIA chips to be sold back into China. And that's important because Jensen knows this, and he's a
Right.
conciliary obviously for Trump,
Yeah.
is that if you don't let them sell back into China,
Right.
guess who becomes more powerful? China. And Huawei.
Exactly.
So it's a balance.
It's a balance.
Because for the first time in 30 years, U.S. has had a China intact.
Correct.
Like I said,
It's a long
it's
game.
year 3 of an 10-year battle.
Right.
There's more data centers under construction today than active data centers.
Right.
And it speaks
And that's
to,
huge. Right.
and-
It speaks to the demand.
It speaks to demand. It also speaks to the opportunity about the second, third, fourth derivatives playing out across the rest of the tech.
Okay, so we also know that in a recent conversation that Jensen Huang, CEO of NVIDIA, talked about that the next play is the energy play. How are we going to fuel these data centers? Is it going to be nuclear or is it going to be solar or it's going to be nuclear?
So right, the reality is, like, to put it in numbers, 3% of U.S. companies have gone down the AI path.
Okay,
When you get to 20%, based on current energy,
right.
there's
We
nothing
run out
left.
of energy.
You don't have enough.
Okay,
That would mean that based on the grid, people's lights would go out in their houses as data.
as data centers go online, our lights will go off.
Yeah.
So we are going to have to make a choice
There's
unless
only-
we find an alternative.
And it's nuclear.
It's nuclear.
To me, nuclear, that's what China has
Right.
done. Solar and grid could maybe do some things around the edges, but nuclear is ultimately going to be the answer for the
Okay.
U.S. And I think right now, the only thing that stops or slows down the AI revolution in
Right.
the U.S. is energy.
Is energy.
It's not capital,
Right.
use cases,
Right. Demand.
is this a bubble,
Right.
demand,
Right.
it's
It's the energy. Okay, because at the end of the day, if you can't turn on the lights, you got nothing going on. You
And-
can build all the infrastructure, but if it can't run, it doesn't have value.
And I think a big area in 2026 is going to be like, how do you play energy? who are names that could be the answer?
That was my next question.
And I think that's
Are you
gonna be-
allowed to tell me? I mean, do you know? I mean, are there companies that come to light that you can mention that would be new companies that actually support the nuclear
Like
grid?
I think GE Vernova is a good example.
That's
I
a
think,
GE spinoff, correct?
Yeah, I think IREN is another example. Aqua clearly is a nuclear play as one of them.
OKLO.
But OKLO. But then there's going to be many others that maybe are private today that I think will be public. And that's So the thing is like that to me is going to be one of the biggest opportunities going forward.
So anyway, we interviewed yesterday. There's a magazine called Payload. Payload is a magazine that deals with all of the stocks in the space, right? And then we were talking about the SpaceX IPO, and then we were talking about tech. And the gentleman